Well, the markets were under a lot of sell pressure today. The VIX, which measures the volatility of the S&P 500, it popped up. Two-year Treasury notes popped up. Defensive plays like healthcare and energy were the top performers in the market today, while the Magnificent Seven were actually on decline. Apple in particular, one of my favorite market indicators, simply couldn't hold support. It fell apart, and now we're going into the CPI data tomorrow, which could be another kick in the pants. We don't know. We're going to have to wait and see what the numbers come out. They come out first thing in the morning. The markets are definitely going to react. No matter what the markets do, we then have another big impact news story coming in the first week of October, which is the jobs report. We know that the Fed wants to see the labor markets loosen up. They remain tight. All of these things with the rising cost of energy are not good signals for the Fed. And as I've said to you guys before, the market has absolutely priced in the pivot and priced in the cut. And we don't know that we're going to get that, which could cause a shock to the market as the Fed goes in a different direction than we're expecting. I'm going to go over some of the heavy hitting stocks today. I'm going to talk about some of my best winners and some of my losers. And I'm going to give you guys some fresh technicals on some of the big tech stocks that I know you guys want me to cover. This is the Stocks with Josh show. I wasn't going to do a video today because I'm a little bit dealing with some allergies. My eyes were puffy. I just wasn't up to it. But, you know, I was reading some comments in the Discord, the Patreon that we've got with the Stock Squad, which, by the way, we're going to be doing a live event tomorrow over on Stockmo's page, I believe. But, you know, just some encouraging comments, people asking, hey, where's the video today? And I thought, you know what? All right, I'm going to get out here. I'm going to make this happen for you guys. So do me a favor, hit the like, throw some love in the comments, throw a heart in there and just say hi. If you're new to this page and you need some help knowing which direction this market's going to go and trading some of these big tech stocks, hit the subscribe and the YouTube all notification bell. All right, I want to point out that Nvidia has not joined Tesla on that recent move up. Tesla just skyrocketed out of that flag pattern a couple days ago, hitting at an incredible high, but Nvidia did not follow. In recent days, they've been sort of traveling together, but Nvidia got left behind while Tesla went on its own journey. And I'm going to do something and compare their two charts to each other and point out something very significant that I see in the charts that might explain why Nvidia got left behind and why Tesla made a move higher. We'll see it in the charts here in just a minute. I wanted to comment on some of the winners and losers of the S&P 500. Obviously, all of the Magnificent Seven were under pressure. They were all not winners today, while Eli Lilly and ExxonMobil were still winning. If you had bought either one of them 40 days ago when I first called them out, you'd be in good profit. Let me know in the comments if you guys are holding any of these. I'm holding a couple calls on Eli Lilly, mostly as a placeholder and to keep an eye on the price action of those options. But I'll just give you guys what I'm going to be looking for. Eli has to break above $601 for me to get a confirmation that it's going to go all the way up to $612 or even as high as $650. Yes, Eli Lilly could go as high as $650, but I will tell you that the charts are slightly leaning bearish to me at this point because we are up against resistance. And so here's what I'm going to be watching out for. And I bet if those who follow me and listen to me and are learning from this page might know what I'm looking for. We're at the top of a run. And I'm looking to decide whether I should go long or go short. I'm looking for a rejection candle or a continuation candle. The rejection candle is going to have a huge wick on the top. Continuation candle is going to be flat. So I'm looking for a continuation flat candle above 601. Then I'm going to get excited. I'll load up and we'll go long even higher. At my initial target is going to be a pop of $15 or $20 on Eli Lilly. We don't have that yet. We don't have that. I'm watching it very carefully. My small position call options are in profit. We're going to see how it interacts with that 601 level over the course of this week. Some of my other winning trades were Paramount and Disney. My call options on those, they're pretty far out into 2024. They were all up today. I'm going to tell you guys that I see Disney hitting $86 very, very soon because that's an important level for it to back test. Now, we can't get excited and get a confirmation that Disney has gotten its low in unless we get a close up and above $86 on the weekly chart. Then we could begin to consider if now it's going to be going higher from here. Right now, we're just back testing 86. If we get rejected, then we could come all the way back beneath $80 and find a new low. That's what I'm watching with Disney, but for the moment, my call options are all in profit. I scalped some puts on Tesla, and that worked. One of the trade alerts that I gave in the Patreon yesterday, after an initial failed put, we entered into a put a bit early, but after I closed out of that, I then said, tomorrow morning, I think this thing's going to push above 276, and I think that's going to be a great spot to enter back into puts. I entered back into puts. Those printed well today as it came all the way down to 267. Apple, though, did not show the love as it broke down beneath the support levels that I had set for it, and I think that if it breaks beneath $174, I think it's got the potential of going much lower, all the way to 168. So tomorrow's going to be a critical day. We're going to be watching it very carefully. I don't know what'll happen tomorrow, but I do see some interesting setups in all of the stock. Apple is not at its very highs, and so we could see a bounce at these lows somewhere around the 174, 175 level that would get us all the way back up to 182 or 185. I'm not predicting that right now. I'm just saying that's a strong possibility. But I will give you guys this other warning, is that if it gets really hairy tomorrow and Apple begins to sell off with some strong pressure, I think it can move all the way down to 168. And yes, if it got to 168, I would personally, I'm going to load up on some calls. It's not a suggestion for what you should do. That's a personal decision I'm making with my money. I'm going to put it at risk and load up if it gets down to 168.80, somewhere in that range. I think we would then pop potentially all the way back up to around 185 on Apple. And so that's how I'd be playing Apple tomorrow. Now I'm going to break down Tesla and Nvidia, and I'm going to compare the two of them and give you guys some fresh technicals on those in just a minute. Let me take a quick station break for the Moomoo investment app. This is a zero cost to trade platform that's available in the US, Australia, and Canada. Now, in the US, they're offering up to 16 free stock as well as a $50 cash bonus. You can click on the link to see the limited time exclusive offer that's specifically available for you. I use Moomoo each and every day. I use it for its stock screener. Its 8 conditional order types are super helpful to get in and out of trades quickly. And I love their earnings calendar. I think it's the best one out there. Get your free stock, get your free cash. Come over there and find us at Stock Josh Fam on the Moomoo app for a free chat group. And I mentioned earlier the Patreon. I'm making calls and predictions and providing charts and analysis every single day in the Patreon. And tomorrow on a live event over on StockMo's page, we're going to do the announcement of some of the details regarding a portfolio that we're going to be actively trading. The Patreon consists of 4 active traders: StockMo, Keenan Grace, Stock Up with Larry Jones, and myself, as well as a host of other successful traders that we're talking and dialoguing there 24/7. Click on that link and come check it out. All right, I'm going to start off with Nvidia, and then I'm going to compare it to Tesla, but it's really not comparing the two companies. I'm just talking about the way their charts are setting up and why one is moving and why the other won't. Either way, we're going to look at support and resistance on both of them, and I'm going to make some soft predictions. Tomorrow's going to be volatile. Mostly, I'm going into tomorrow largely risk off. I'm going to be looking for opportunities, extreme reactions to the market, and that's where I'm probably going to take positions. So let's just take a minute, go into Nvidia, and I'll give you guys my thoughts there. All right, we're looking at the daily chart of Nvidia. And there's just we're going to keep it really, really simple. We are sitting on an important fib level of support at 448. And so, let's just pause and acknowledge that that's pretty ominous. It's come all the way down right before the critical CPI data report, and it's sitting on support, which means that it's prepared to either bounce back up or it's prepared to break support and go all the way down to the next level beneath on the fib. Now, I'm not saying that it would happen all of that in one day. Some move like that would initially look like a breakdown into this zone, and eventually it would look like a breakdown over time to that level. But sitting on this support, I'm expecting volatility, and we've come down quite a bit from the recent high above 500. We've come all the way down to 448, and I don't think, as I've said many times, the market doesn't just go straight down. So here's kind of what I'm going to be watching for. I'm going to be watching for some volatility. I see support at 434, and so it wouldn't shock me if we came down, we bounced off that, we pushed back up into this critical buy zone, and we could potentially backtest all the way to 458 or 460. Now I'm looking at the daily calendar chart, and that's sort of the move I'm expecting because we've had a significant sell-off here over the last couple weeks, and we could easily just come a little further, find this previous level of support. It's worked a couple times as resistance, support. I'm expecting it to be a bounce zone for support again. Ultimately, I'm going to warn you guys that Nvidia is cooling off and slowing down, and At some point, we're likely to come and break this level of support at 448 and 434, and we're likely to come and close beneath it. We'll probably backtest 434, and then at that point, yes, we are going to be looking at fighting all of these levels down until we eventually get back to this 350 level. I'm not calling that for right now, but I think that that's a potential in the days ahead. I think we're going to see some volatility. 434, 460, that's going to be a range I will be looking to trade tomorrow. All right, now I want to take you guys into the Tesla chart, and I'm going to point out a number of bullish and bearish things in the chart so you guys can see them with your own eyes. Take a minute, screenshot these charts, save them, because you know we're going to talk about them in the coming days. All right, we're looking at the daily candlestick chart for Tesla, and we're going to go through this very quickly. 270 was largely acting as support most of the day, but I did call out and say that it was not support, that true support beneath was at 267.60. And I did point out that we're sitting on support with a pretty ugly looking candle. Going into the CPI tomorrow, there's a very strong possibility that we're going to break beneath to 265. Now, in addition to that, I believe that we could see a move all the way down to 260, okay? Either way, if we're going to get to 265 and then very possibly to 260, I'm imagining that we're going to see a bounce, right? If we don't bounce at 265 and we push all the way through to 260, I think we'll see a bounce at 260. I want to point out a couple other technicals. We are here, we have this long-standing descending line of resistance that we're very close to, and so there is the possibility that we could push up and touch this channel before going lower. But you know, obviously, we like to buy when things are down on their lows. Here, down on their lows. We called this between 212 and 225, and we called it a buy, and we were able to enjoy this incredible run up all the way up to 280. But we're not down here anymore. We're up towards the top, and so there's a little bit more risk at hand. If we were to actually go down below 260 and there was no bounce and no buy signal given to us, anything beneath 265 or 260, we would possibly be looking to short it, going down further initially to 240. But then yet again, we'd be looking for it to even move further down to 212. We're not in that scenario right now. I'm largely looking for calls to the upside, but we got to watch both of them. But let's just take a quick look at some other indicators. We're going to look at the relative strength index, and I'm going to switch over to the monthly view. Now, here's where things got really interesting for me in the charts. Right away, you see that Tesla has been oversold at the level of right around 37% on the RSI. And just recently, we came down and had a very similar dip. We got all the way to around 38.45, and that potentially looks like a buy signal for Tesla. It's about as oversold as Tesla typically gets. Now, when it got to this level of being oversold beneath 40%, the last time it did that, it gave us this phenomenal breakout move. We moved on the monthly chart. We're looking at the candlesticks which go above the blue 20 SMA. That's typically a transition into bull territory. When we got down to that oversold level, we skyrocketed up. It gave us this incredible run all the way up to Tesla's all-time high of $414. And lo and behold, with all of this aftermath, after we sold off from that $414 level, getting us all the way back to $100, we got that same level of being oversold. And now we've pushed up above the 50% mark. And I've shared with you guys many times, anything above the 50% mark is bull territory. Anything beneath is bear territory. And so we're at a critical level of decision. We've come up back into bull territory, and we had that. We're still operating off of that incredible oversold condition. And then most importantly, one of the things that I really like, we are still above that blue 20 SMA. And on top of that, if you guys can see it, I know it's small on your screens, we have this incredible red hammer that has pushed us out of the bear zone, back into the bull zone, an incredible bullish hammer. Now, the last time we got that was right over here. We got another very similar looking candle. And after it pushed us up above the blue SMA again, we continued in sort of a rough, volatile environment for the next couple months, but ultimately, after we passed that period, we got this massive move up on Tesla. And so, with the RSI still working in our favor, with this beautiful candlestick that we got here in the month of August working in our favor, we have the potential for a push higher on Tesla. Let's go see if we can get some confluence with the MACD. I'm going to look at the MACD on the monthly candlestick chart as well for this. Moving average, convergence, divergence. And wow, the MACD is actually setting up quite nicely as well. Whenever you see this blue line cross over the orange line, that's bearish for the stock. You see that happened up here when Tesla had hit its all-time high around $414. We went into a very long downtrend. But whenever you see the blue line cross back over the orange line, very similar to what had happened back here, that same period of time when it had gotten extremely oversold on the RSI, it gave birth to a long period of time in which Tesla ran up. And so working off of a potential buy signal on the MACD and the RSI on the monthly candlestick chart, things are looking pretty good. Now, I told you I wanted to compare Tesla chart and Nvidia chart. You guys saw my daily prediction for Nvidia, and we saw the prediction for the daily technicals for Tesla. But now I want to take you guys into the monthly overview of Nvidia and see how that compares differently from the two buy signals that I just showed you in Tesla's chart. All right, we're looking at the monthly chart. We also see that in the similar fashion, Nvidia has been above its 20 SMA on the monthly candlestick chart, which gave us a long period of a bullish move. But we do have this all-time high of over $500, followed by a very strong engulfing bearish candlestick. Now, that's pretty ominous, and it's come back. It's touching that 20 SMA. And now we got to look at the RSI and the MACD and see if it would give us a signal of that this potentially could be moving downward from here. So let's go into the RSI. Let's start there first. Okay, yes, we see that the RSI is doing something very different with Nvidia than with Tesla. The RSI is moving back underneath the 70% level, or at the moment, it's just touching it. Whenever the RSI drops back beneath the 70% level, that typically is a bearish signal. Now, we are still up above the 50% level, which means we're in bull territory, and it could be that we were going to vacillate in this overbought area sideways, allowing the stock to continue to climb. We don't know that. The very last time that it began to break down beneath back into the 70% level, you see was right here. You see that it came down in, it leveled off around 63%, and then it came back and it back tested the top of the channel where it failed and dropped lower, right? Well, we see right now that we're sort of in a similar fashion. When we were at that time above the 20 SMA, it was the last candle that was above it before we dropped underneath the 20 SMA and we got this long period of sell-off. All right, let's go over and let's quickly check out the MACD at the same time here. Moving average convergence divergence. And that's the one that, to be honest with you, is even a little bit more bearish, okay? Because the very last time we hit an all-time high with Nvidia was right around this 346 level, right? And when it did that, the MACD was up above the 0% level of the histogram. That's the center line here. That's 0%. It was way up here at around the 52% level. And when it began to curve over and signal that it was going to drop beneath the orange line, it also went from dark green candles to light green candles, and it began to curve over. That was the signal that we were going to be in an extended period of a downturn. Well, we are now at the same place. We've had this huge swing up, and the MACD is potentially beginning to curve over, and we went from a dark green to a light green candle in a similar mode. This could be signaling that we're possibly going to the downside on Nvidia. Now, those dynamics do not guarantee that Tesla's going up or Nvidia's going down. I just thought you would find them interesting. They're in two totally different spots when it comes to the MACD and the RSI. The RSI and the MACD on Tesla is looking kind of bullish. The RSI and the MACD on Nvidia is looking kind of bearish. So we're going to be watching them tomorrow. If you remember, Nvidia, I said, could have a flash down, but I would still be buying that because I don't think that we've tested all of the lower highs that we could potentially test before proving that it wants to go down. The market's going to move in that volatile sideways distribution pattern, testing each level to the upside, making a lower high along the way till eventually it capitulates. And normally it does that for 2 or 3 months after making a new all-time high. And so I don't think that Nvidia is ready to go straight down. So I'll be buying the dip on Nvidia as well. But in the back of my head, I know that the charts are a little bit weaker than they are for Tesla, which means there could be the need to take greater cautions when trading Nvidia over the course of the next 4 months. And Tesla, I think it leans a little bit bullish, and so I'm going to be a little bit more risk on with Tesla. Now, both of these are extremely volatile stocks, and so you got to be extremely careful with them. I needed to get this video out to you guys. I wanted to get this content out to you guys. Let me know in the comment section if it helped you. Let me know in the comment section if you made any money today. As always, I want to thank you guys for joining me on this journey. I want to thank you for hitting those likes for me. Hit the subscribe and the YouTube all notification bell if you need content like this. Don't forget that tomorrow I'm going to be going live over on StockMo's page with the Core 4. We've got some exciting announcements we're going to be sharing on that, as well as the reaction to the CPI data and whatever the aftermath is for the markets tomorrow. It's going to be an interesting day for sure. All right, guys, that's it for today. Peace and blessings. Take care.